This is the Friday, March 4th, 2016 version of the Market Plus segment. Joining us now is Elaine Kub. Elaine, welcome back.
Good to be here.
And we've got a lot of questions for you. We're just going to dive right into it tonight. We've got a question here from Isaac Christensen on Twitter. He's wondering, do you still see the chance for a sizable spring rally given the amount of ending stocks? Let's talk corn and beans.
Define sizable.
Let's put 50 cents on corn and $1 on beans.
Maybe. So his question talks about ending stocks. And I think he's implying that because we have such comfortable inventories right now, 13-14% stocks to use ratio in corn, for instance, that there would be no justification to have a rally in the spring because we got all this left over. But I don't think that a 13% stocks to use ratio in corn is so cumbersome. I mean, the industry has built up enough storage to handle this. It's not groaning underneath this weight of corn. And so this is not unusual. If you look historically, this is not an unusual quantity of inventory. So therefore, I think this is normal. I think that we can go into spring and have a normal rally if you get some kind of a weather problem.
Still see 50 cents or $1 in old crop rally for folks that are still sitting on old crop, or would it be just strictly a new crop rally?
No, I don't see 50 cents in old crop rally at all. In fact, I'm much more concerned about old crop falling to pieces, basis falling to pieces in a quick hurry sometime this summer if the grain is not moving. Now, we have seen corn basis, it fell about 10 cents, but part of that was just the roll from the March to May futures, but it has weakened about 5 cents, let's say, in the past couple of months. So it suggests that March 1st date of people maybe having to make land payments or just deciding to give up on paying deferred payment, storage rates to their elevator, that there has been some corn being sold. So it is starting to move, and that's really good news because it's got to move sometime before harvest. And if everybody just waits until August and all sells on the same date, that would be a mess. So, old crop, no, I don't see any sort of awesome rally happening.
But these ending stocks aren't enough, in your opinion, to completely suffocate any opportunity for new crop to rally?
Yes, exactly.
Probably not to 2012 levels.
Probably not.
Okay.
Yeah.
But we could put 50 cents to $1.
What could even happen?
I don't know.
Yeah.
All right. Well, we got another question here for you from Quentin Bowen. And Quentin has asked, are the contract highs in for the year on D16 corn and Nov 16 beans? And what about the lows?
I hope not. I hope that there will still be some sort of a spring weather rally. And like I said, maybe not a 50 cents or $1 rally, but something, because that is the seasonal expectations. Are the lows in? Probably not that either.
Okay.
So the typical pattern is that you would have, it might stay within this range, this 30-cent range, which is a very tight range compared to the sort of volatility that we used to see in these markets. It might stay in that range and have a slightly higher bounce in the March or June, sort of mid-June timeframe. That's when the best statistical probability of seeing the annual high is on June 18th for corn. I did that math. But then absolutely it could continue lower all the way through the growing season, and we could absolutely see contract lows much lower if we have a huge crop.
And that's been a question I've heard from a lot of folks out in the countryside without a weather event, with a trend line yield, corn and soybeans. Where do you see fundamental value of these crops at harvest? Sub $3 corn?
No. I think that this range has factored in ample inventory. So we've had ample inventories this year. We're probably going to have ample inventories next year. But this is the price that end users are able to pay. This is the price that farmers are basically demanding in order to make it move. So no, I'm not worried about it falling into a sub $3 level because this is not difficult for the industry to pay this price. Okay,
so a big crop, or at least an average crop, isn't going to break this market any harder.
I hope not. And in my opinion, it shouldn't. Yes.
Okay, so the potential then is to the upside on a weather risk.
Yes.
Not necessarily a lot left to the downside.
That's my opinion, yes.
Okay, well, I appreciate that, Elaine. We've got a question here from Glenn Newcomer on Twitter. Glenn is wondering, should the grain complex beware the Ides of March? A little Shakespearean question for you.
It's very Shakespearean.
Are you superstitious in that regard?
I was going to make a smart comment about Julius Caesar, but I won't.
Corn market stabbed in the back?
Yeah, but no. So March is March is sometimes a good time frame for bullish activity in these grain markets if you have this battle for acres idea. But I think this March, is going to be fairly bearish because we're looking towards that prospective plantings report that is so far the expectation is for that to be bearish. So going out of it, we could have a surprise if the bears are disappointed. But going into it all through the month of March, I think the general tone is going to be bearish. And the general tone is going to be bearish based on all the South American progress, and harvest progress hasn't been that disturbed. So I mean, he's got a good point that we should beware of bearishness, not necessarily on March 15th, but all throughout the month.
Okay. And if you need to make sales, maybe you make them at the front end of this month before the bearish news beats it up if cash is needed short term.
Yep.
All right. Now, you mentioned on the program that your guess for this next week was higher crude. What made you think that? It looked like you had something on your mind before I cut you off.
I was just thinking of the dollar chart. You know, it would be unusual for the dollar to fall apart the way that it did on Friday and then jump right back up. It's probably going to continue a lower correction for at least a few more days. I mean, that's just the trend of the market. So you asked within a week, and so I would say that the crude oil would be able to maintain its higher rally for the next week or so. But it's already at $35. I mean, it's had quite a bounce since that February 11th was sort of the turning point when the whole global economic thing. That was the pinnacle of global investors' fear. That was mostly expressed. All of the selling pretty much got done by February 11th, let's say. And crude oil has had a nice bounce since then, and I think that bounce could be tapering off after this next week or so.
$8 or $9 rally we're into, probably going to go back and correct.
Right, because I mean, a $50 price tag would receive probably a lot more production from Iran. An announcement might be made if you reach that kind of a level. So I don't think we're going to get another $15 on this very soon, but another 10, maybe.
And you've got to think $50 would probably entice some of the frackers to get back into, or at least get the wells dusted off and the drillers and get back to it. Now, one thing we didn't have a chance to address on the show, a month ago, there was a lot of conversation and commotion about the volatility in the cattle markets. It seemed like it was a limit day twice a week. Over the past month, that's dissipated. We're kind of reverting back to still volatile, but not quite as pronounced movements. As a market analyst, Elaine, what does that shift tell you? Are we topping, bottoming, becoming comfortable with supplies? What are your thoughts?
I think the mechanics of the futures being so volatile previously and not being so volatile now, this kind of goes back to Phil's algorithm question, is that there might be a different makeup or different behaviors of the speculators that are in there. And that they are currently, the volume of trade that they have in there now is quieted down a little bit. And they are net long, so that's good for the markets or people who are trying to sell these products. But I don't specifically know. I mean, we were never really going to know all of the mechanics of who's deciding what underneath there. But it just does seem to have quieted down. The speculators have quieted down. And, you know, I don't know if it was we could have conspiracy theories about the CME, you know, tamping down some sort of behavior in order to, you know, equivocate the complaints that they received last month. I just made that up. I don't know. Really hard to say the mechanics of what's going on behind that.
But in general, larger volatility to less volatility would be a sign of maybe a maturing market, or at least the speculation ebbing.
Yes, exactly.
All right. Well, Elaine Kub, thanks so much for taking the time to join us this week.
It's been a pleasure.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.